everybody. Here is your weekly Salt Lake County market update. I got something pretty interesting for you. I'll tell you what I'm seeing. So, we just looked at this last week, and on this table, again, you're staring at a monthly count of the total number of single-family homes sold in Salt Lake County. I've removed condos and townhouses. So this is just single-family residences. And I won't be too redundant. We know that the market peaked out last May, then it went down till January, and then it's been going up since February. And you can slice this apple two ways. You can look at median price, or you can look at average price. So if we look at median price, everything we've been talking about the last few weeks rings true. However, right now in June, we are not beating the median price that was set in May of $600,000, where 809 sales occurs. In fact, we're on today's June 21st, and only 414 sales have occurred in June at a median price of $597,000. So if June does not surpass May, it'll be the first month in 4 months that the median price actually goes down a tiny bit. And I'm quite concerned about the amount of sales. We only have about a little over a week left in June. Last June, 1,021 homes sold. And the June prior to that, 1,254 homes sold. In fact, June is typically the highest single-family home sale count year after year after year. I'll tell you what I think it all means in just a minute, but I want to switch over from looking at median price to average price and slice the apple another way. And as you can see, the data still rings very true. If you look at average price, it still peaked out last May. It declined all the way until January, and then it went up in February, went up in March, went down a little bit in April, and went up again in May. But so far in June, it's down from May as well. So we've got unit sales down a little bit, more than expected, and it's recent because in May, things were still going up and sales were still pretty darn decent. We've got median price down a tiny bit, and we've got average price down a tiny bit. So what does all that mean to me? Well, I got to tell you, this is showing how rate sensitive the market is. Just these little fluctuations in June that have people popping above 7% at a few closings and interest rates the last 3 weeks versus, low to mid sixes, that made a big difference. And I don't know if that's the Fed's intention to slow sales, but it's definitely slowed sales in what should be the hottest month. Sky isn't falling. Inventory is still low. We're all banking on our consumers being able to refinance. So that's still the story. But the reality is the market is extremely rate sensitive. And here's one other side note. About a third of all the sales around the United States every year are all cash with no loan. So that's what's holding up the market right now, cash purchases. That's why properties are still not really sliding too much in value. And a lot of them are cash purchases by investors, not primary residence owners. So that's holding the market. My worry is that cash investors aren't being able to flip properties, or they're not getting the rent they expected at these prices. And so they're starting to waffle a little bit. I have seen that. I've listed some properties that typically would fly off the shelves to a home flipper or an investor, and have been for the last decade. And now it's getting quite a bit harder to get multiple offers, even on those dilapidated properties. These flippers with cash are getting market pricing sensitive and worried about being able to resell the property when they're finished. So there's your weekly market update. We'll see how rate sensitive it continues and if it turns around a bit here in the next coming week.